Welcome to This Explainer. So today, we're looking at something that literally affects every single one of us: the 2026 investment landscape and building sustainable wealth. The rules of the financial game have totally shifted, and right now, more people than ever are actively hunting for long-term financial freedom. We're going to break down exactly how people are building real, sustainable wealth today using the actual data and trends straight from the current market. Okay, let's dive into this map of the 2026 investment buffet. We're going to take a journey through 5 huge macro trends today. 1. The new American investor. 2. The AI gold rush. 3. ETFs and the diversified approach. 4. The diversifiers like crypto, real estate, and alternatives. And 5. The power of financial education. Section 1. The new American investor. The shift from savings to growth. Listen, the old way of managing your money, it's officially dead. Seriously, for previous generations, the playbook was super simple. You just put your money in a traditional savings account and, well, hope for the best. But today's investors, they know that letting cash just sit idle is a total dead end. To actually grow your wealth today, you have to actively put your capital to work in the markets. So why is this massive shift happening right now? Well, it really comes down to 3 main catalysts. First, inflation is just eating away at your purchasing power. Second, rapid technological innovation is completely reshaping the financial landscape. And third, changing economic conditions overall. These factors are exactly why millions of Americans are no longer settling for basic savings accounts. They're out there actively hunting for higher returns over time. Which brings us to Section 2, the AI gold rush, the next great leap. And wow, this is easily the most talked about trend across America right now. Financial experts are saying the AI revolution is like the rise of the internet in the 1990s, transforming industries from healthcare to finance. I mean, just think about the magnitude of that. Education, transportation, medicine, literally everything is being touched by this. This isn't just some minor tech update on your phone. It is a fundamental transformation of the global economy, and investors definitely know it. So, where are the billions actually going? Investors are pouring their money into 3 main pillars: AI software, advanced data centers, and powerful computer chips. Bam, bam, bam. That's the software itself, the massive facilities needed to house the systems, and the hardware that fuels the whole shebang. Tech stocks and AI-focused funds have become absolutely central as capital just rushes in to fund this next generation of digital infrastructure. Section 3. ETFs, the diversified approach. Now, if AI is the high-growth rocket ship, ETFs are the incredibly stable anchor of the modern portfolio. Let's look at the definition. An ETF, or exchange-traded fund, is an investment fund that allows you to own a collection of stocks rather than relying on a single company, significantly reducing risk. It's such a simple concept, but it completely protects investors from the massive dangers of trying to pick single winning stocks. You just buy the entire basket instead. Just take a look at the growing sectors capturing this diversified capital. We've got technology, healthcare, clean energy, and artificial intelligence. By grabbing a single low-cost ETF, you get instant diversification across all of these booming industries at once. You capture the massive macroeconomic upswing without having to perfectly time when to buy or sell one specific company. Honestly, low-cost index funds tracking the broader U.S. stock market remain the undisputed heavyweight champions of long-term wealth. Financial advisors consistently recommend these broad index funds for retirement planning for one simple reason: they just work. They attract massive capital, they are highly effective, and they form the absolute bedrock of a solid financial future. Moving on to Section 4, crypto, real estate, alternatives, the diversifiers, because Americans are definitely looking way beyond standard stocks and bonds right now. First up in the diversification space, digital assets, specifically Bitcoin and Ethereum. Now, yes, we all know crypto has its volatility, but millions are still heavily investing here. They see it as the critical infrastructure for a new global fintech. And the big game changer? The introduction of new regulated investment products. That has massively increased public confidence and really bridged the gap for traditional capital to jump in. Then we have REITs, or real estate investment trusts. These are investments in large-scale real estate projects that allow you to benefit from property appreciation without directly owning a building. This is such an easier alternative to going out, buying rental properties, and dealing with tenants yourself. You still get that passive income and real estate exposure, but without the headache of actually managing physical buildings. And rounding out the diversifiers, we have alternative assets, We're talking private businesses, startups, massive infrastructure projects, and private credit funds. Wealthier investors are increasingly stepping outside the public markets entirely to use these assets. As the markets evolve, it's a way to find really unique growth opportunities that just aren't correlated with your regular stock market. Finally, Section 5, the power of financial education, the ultimate asset. This is perhaps the most important trend of all, the absolute rise of the educated investor. Just look at the learning tools we have today: social media platforms, podcasts, financial newsletters, online courses. These accessible modern tools have completely democratized financial knowledge for millions of people. The Wall Street gatekeepers? Yeah, they don't hold a monopoly on financial literacy anymore. High-level strategic information is right at our fingertips. And armed with all that knowledge, young adults today are using an incredibly simple 3-step journey to build incredible wealth. Step 1, start your investment journey early. Step 2, contribute to your accounts regularly. And Step 3, take advantage of compound growth over many years. It's purely mathematical. Just automate it and let compound interest do the heavy lifting for you over the decades. This perfectly highlights the ultimate mindset shift of 2026, getting rich overnight versus building sustainable wealth. Investors have completely replaced that old lottery ticket mentality with patience, education, and discipline. Whether you're in AI, index funds, real estate, or private credit, it's not about getting lucky anymore. It's about making calculated, sustainable moves. Because at the end of the day, as technology continues to create new frontiers, investing remains the single most powerful lever for financial independence. The tools are here, the knowledge is entirely accessible. So, what is your money doing today? Thank you so much for joining me for this explainer, and I hope this empowers you to take absolute control of your financial future.